Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find it. In this video, I looked back and found a very relevant technical pattern for the action since mid-December last year. That key piece of evidence recreated here on this daily chart is the bright red 2009 to 2016 bullish shift pitch hook, and the specific key piece is the bright red upper tie, currently at 13,447. That sits across and just above today's range. This bright red upper tie had cap prices, despite one occasion, from December last year until early May this year. It was a key piece of overhead resistance and the only piece of resistance seen here since the break upwards at the end of last year and the start of this year. Thus I started to look for the next pattern, and 3 weeks ago we had 3 possibilities, only 2 of which are working now, and also a new pattern that has emerged recently. The first still working pattern is the purple November 25 to March 26 bullish shift pitch hook, with prices in between the overhead purple middle time, currently at 14,226, and the purple lower time below, currently at 12,567. This pitch hook and the earlier bullish Andrews pitch hook for the same move created what we saw in the middle of last week when I said over the last few weeks, and I quote, "I also note the time crossover just happened on the 29th of May, and I caution about a possible volatility as we approach the next crossover on the 25th of June. End of quote. And that came about. The second, just about working pattern, is one I have been somewhat uncomfortable with, but has since shown some interesting influences. It is a possible late December 25 to early May reverse head and shoulders pattern. A pattern that is usually considered bullish, though there is a bearish continuation variety. The bright pink neckline, currently at 13,406, is very close to the breached bright red upper tie. For now, we can basically look at them as being the same. The market is now just below this bright pink neckline, but for the most part of May and June, it was above, and I considered, and I quote, lay out what I consider potentials right now, but not targets as yet, but potentials for the move higher. Thus, the primary potential will be up in the 14,747 area, thus above the high of the market, and a secondary harder to reach potential will be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern. I think it is the weakest by a country mile of the ideas mentioned. End of quote. This weakness has been justified as prices have last week and this been below, for the most part, both bright red upper tie and bright pink neckline. Then we have the third new pattern. This can be seen as either an early May to late June descending triangle, which is currently 13,406 to 13,835, utilising the bright pink neckline as the base of the triangle. So I've also drawn a dark blue trend line for both the lower and upper trend lines. Or it can be a longer term end of January to late May possible descending triangle, utilising the same base but with a higher downtrend, which is currently at 14,050. Not as yet highlighted the upper trend line of this new pattern, the longer term pattern, so I'm not all that keen on the latter pattern, but I could see the former happening. Now, I spoke about the early May to late June descending triangle pattern quite extensively last week, and it is worth repeating and considering those words now, and I quote, thus in time between my commentaries it might be worth looking at further potentials, not targets, but potentials on the downside this time, of a primary potential down in the 13,033 zone and a secondary harder to reach potential down in the 12,645 zone. Be interested to see if this develops, and before you ask, I've considered the possibility of the May to day action being either or both a head and shoulders top and the triple top, and for now have discarded these ideas. End of quote. Primary potential at 13,033 was reached last Wednesday, and I formalised the harder to reach secondary target X at 12,645. Oddly enough, I am having some further doubts about target X now at 12,645 after seeing how the market performed, supported by the bright green neckline, which is currently at 13,034 of the July to September 2024 reverse head and shoulders pattern, plus the nearby 50% Fibonacci line of the March to May move at 12,947. LME 3-month aluminium. The market here edged out from what was originally a bright green April/May 2025 bull channel that morphed over time into an April/May to date very large bright green expanding wedge pattern, currently 3169 to 3730. However, after January this year, and especially after March, the bright green upper trend line became more of an attractor for a good while, and is tied in nicely with other patterns that have since retired. Price drop from the upper trend line really ended about 3 weeks ago, with prices falling, hesitating for a middle time for a bit between the short medium moving average, currently at 35.23, and the important purple middle time, currently at 34.75, and that's of the big old November 15 to April 2020 bullish Andrews pitchfork. I'll speak on this one shortly. And 3 weeks ago formed a bearish halfway hesitation stroke bear flag, dropping down to the medium moving average, currently 34.13, forming another bearish halfway hesitation stroke bear flag 2 weeks ago, and last week seeing the second leg lower. I said last week, and I quote, on this basis I'd watch out to see if we soon form a third bearish half hesitation stroke bear flag pattern around the gold long moving average below. That's currently 31.57, and the bright green lower trend line, currently 31.69, of the previously mentioned very large rising expanding wedge pattern. End of quote. This week it seems this may be coming about, so watch carefully the action around the bright green trend line and the gold long moving average. If it does form, then we have a primary potential right now down in the 30.63 zone, just below the first series of stratified bands of congestion between 30.65 to 30.76, and above the next congestion band between 29.74 to 30.23 that contains the dark blue neckline extension, currently at 29.85, of the large 2022 to 2024 reverse head and shoulders pattern. The secondary, much harder to reach potential is down in the 28.92 zone, which is under the next congestion band, which is between 29.07 to 29.29, but above a further congestion band below between 28.41 to 28.51. This latter band may not be that great. Now, last week I started looking at the whole 2026 action as well, and early from actually summer last year as possibly a new and big pattern. I said at the time, and I quote, this whole 2026 to date structure, possibly even earlier, reminds me of an inverted descending scallop pattern. A thought and pattern I might explore if this move lower continues below the gold long moving average. And that's the end of the quote. Well, I have studied this action a little more, and whilst I may initially have looked at this action as an inverted descending scallop pattern, I am more inclined today to look at it as a bearish bump and run reversal top pattern now, with the market in or entering in the run phase. The main reason for this is that with a scallop pattern you'd have the opportunity to pull back upwards, whereas I'm inclined to look at this now possible pattern as a bump and run reversal top and not having that opportunity right now. The measurements for this pattern are also interesting, as we have already reached the primary target of this pattern at 32.02 and may now be looking at the secondary hard to reach target X down at 29.75, just under the dark blue neckline. I should now expand once again on the purple middle time, now above, currently at 34.75 of the very large November 2015 to April 2020 bullish Andrews pitchfork. This bullish pattern is still in operation, as the upper tine is right now still off the top of my daily chart, and the purple lower tine, currently 26.52, is down towards the lower end of my daily chart. This leads me on to my final point, and that is all these actions we are set up to make a monthly key reversal pattern for June. Thus, if we close tonight either over 36.74 or under 34.80, then we would be on. Anything in between would have a lesser outside month pattern. It's fairly obvious that we are looking at June being a monthly key reversal down, with all the ramifications that may have. LME 3-month lead. The break below the April to mid-June bull channel has been the key driver in the market's recent move lower. The market cut down through dubious support, though still good resistance, from the slowly declining long moving average, currently 1984, as well as the short medium moving average, currently 1972, and the medium moving average, currently 1957. That last one was allied with the neckline, which is currently at 1959, of the January base head and shoulders top. The targets such a move lower from the bull channel were a primary target down in the 1942 zone, which was reached early last week, and a secondary harder to reach target X down in the 1906 zone, which was reached late last week. In addition to all these, 3 other patterns have cropped up. The first was to regard the whole June action as a potential bearish halfway hesitation stroke bear flag action, with a primary potential down in the 1940 zone, a zone we have already reached, and a secondary harder reach potential down in the 1882 zone, close to the lows of this year, and one which we reached today. The second pattern is in the final process of completion. That is a monthly key reversal for June. Thus, if with prices close tonight either over 2012 or under 1954, then we're beyond. If market closes in between, then we have a lesser outside month pattern. Right now we are most definitely looking at a monthly key reversal down. The third pattern was in construction last week and completed construction in the middle of the week. It is an early May to late June head and shoulders top, a bright red neckline above, currently at 1926. Last week I said about this pattern, and I quote, "We're in the final stages of completing this pattern, so I cannot give targets below, assuming of course it is a head and shoulders top, but I can give an idea of the size of the move should it happen in between my commentaries. Hence, for a confirmed break below the bright red neckline, we'd have a primary move of about minus $50 under the neckline break, and a secondary harder to achieve move of minus $97 under the neckline break." End of quote. Since then we have had a break lower, and hence it gave a primary target at 1881, a target we reached today, and a secondary harder to reach target X1 down at 1834. This brings me to my final point. It's a point I've been making here since the start of 2025 and will continue to do so going forward. The end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we haven't really done that much, especially compared to some of the other metals. Indeed, prices are only about $70 or so lower today than they were at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is a repudiation of it. Hence I still say, even now, with prices where they are, that one should still look at all things going forward, in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.